Hey guys, so it's Wednesday and I'm making a trade breakdown for Tuesday, so yesterday, because yesterday was a really difficult trading day and it was my birthday actually, so I couldn't really find the time to record it. So now I'm doing it right now. But yeah, let's drop to the chart. So as you see right here, um, we have the daily chart. So basically we regard the daily candle right here. So Tuesday, that's Wednesday, so that's today, but we will talk about the yesterday, so that's the candle we have to refer to. And basically, as you see right here, we are still trading at all-time highs, which means we still have a bullish bias for the day, because we don't want to predict the top, and yeah, we want to look for higher prices. Then dropping down to the 50-minute chart. So basically, what was interesting to me was definitely the equal lows right here, and also like obviously London lows, London highs, New York open kill zone right here. So the high of New York open kill zone right here, and the low of the New York kill zone right here. And we also have like all the opening prices right here, so 8:30, 9:30, and midnight opening price. And as you see right here, we traded already way above the midnight opening price within London. And then with the opening, so right here, we traded lower and swapped all the session liquidity and the equal lows right here. And we also traded below the opening prices. And that's why it was so difficult to me. So basically, if we want to target higher prices, we want to see that the opening trades lower and sweeps liquidity in order for us to follow the trend again higher afterwards. So I was looking for longs, obviously, and that's like the 5-minute chart, nothing really special in here. We also had like a new daily opening gap. So that's what I forgot to mention. So right here, that's the higher time frame gap. That's the new daily opening gap right here. So here is the 6 p.m. opening price. So for the day. And dropping to the 1-minute chart, now it really gets interesting. So basically, as you can see right here, we traded lower with the opening, but that doesn't really looks bearish trending, and we are still looking for higher prices on the daily chart. So really difficult to say. We scrapped a lot of sell side liquidity and traded way below the opening prices. We traded into a higher time frame gap, and now I'm just looking actually for longs. So obviously that's my setup. We are within the 10 a.m. macro right here, so 9:50 until 10:15 or 9:45 until 10:15. It's really how you like it, how you prefer it. And as you see right here, we have also like this big bearish fair value gap, but I only took like a closer look to the SIBI right here. So that's the real SIBI, I would call it, the real bearish fair value gap. And that's like more the important level, because we also can see that price reacts to it right here. So to consequent encroachment, so CE, and therefore we know that this level is important. And now, as you can see right here, I took 3 trades actually, and it's really hard to tell. So I got stopped on all of these 3 attempts long, but it's really hard to tell what I did wrong. So I will come to the daily chart once more later, I guess. But first of all, the 1-minute chart. So basically, right here we are within the within the 10 a.m. macro, and as you see right here, the price action already looks really difficult, so high resistance and really choppy, and can't really trade above the inversion fair value gap. Nevertheless, we traded above it and closed strongly, and also ES looked bullish to that point, time and point. So as you can see right here, we also have like the 10 AM macro. So I think the fair value gap right here is a bit later, but as you can see, S&P is not really telling us that we will drop lower much. So it's not really, they are still correlated. So I want to say they are not really, there's nothing really off. So that's looking good. And we also had like, what the, wait, we also had like regular trading hours, and there we traded way higher. But also, as you can see right here, that's maybe a bit a important sign. So already at regular trading hour, you can see that we are very overextended. So we have a huge new opening gap, so almost 300 points, and that's basically, that tells us that we are really overbought, and therefore we first want to wait that we at least can reach maybe the upper quadrant right here. And as you see, we couldn't really reach it with 10-12 right here, so that tells us that we are maybe already reached our objective on the higher time frame. So on the daily chart, we already achieved such higher prices before the opening, and therefore the objective is already met, and we can't really trade higher from here on because we are already this overextended. So that's definitely a warning sign. We should have taken more seriously, I guess. And as you can see right here, for today, we are probably dropping lower, taking out the lows right here. Something like that, I don't know. But we are talking about yesterday. So as already mentioned, the upper quadrant would definitely be an important level. We don't expect price to trade all the way back down to consequent encroachment because we are just in such higher prices, and the opening gap is just too big for that. But nevertheless, coming once again back to the 1 minute chart on NQ, we traded higher, and as I already mentioned, I entered right here, so after we closed above the inversion fair value gap. And I think that's a bit difficult to say because for me, my system is that I only enter for a market maker buy model if we close above a inversion fair value gap. And right here, I only took like the important level of the SIBI. But if you would take like the whole portion, we already reacted to it perfectly right here. So, and then we displaced lower and took out the low. So maybe we should have been more patient right here. But nevertheless, we also like entered right here, and here we also like had the fair value gap right here, which was on S&P, the big fair value gap I mentioned before. And so therefore that's actually a valid buy right here, because so on this chart, on this 1 minute chart, the buy right here is valid because we took out the low, and if we want to trade higher, we have to do it now because we are after the macro, and now it's the silver bullet time window, and we don't really have much time left, I would call it, if we want to trade higher. So if we still have a bullish bias, but as you can see right here, we wicked lower aggressively and I got stopped, but the body stayed inside, so I entered again. But in this case, that's what I definitely learned. I don't want to enter again after a huge quick stopped me. So it's just all these all the long wicks right here are just too high resistance, and definitely a sign to be aware of, which stands for obviously high resistance and difficult trading conditions. So yeah, I got stopped 3 times right here, and I lost around $160 I think, so I'm now down $100 on my paper trading account. But that's not really the important factor I want to talk about. For me, it's the fact that I'm looking for a market maker buy model and I'm following my system on the lower chart. So that's true right here. I am basically following my system. I'm only entering after we traded above the inversion favorable gap. Even if you would take like the whole range, right here we would trade above it and it would still be valid. But it's important to understand like the whole factor why we can't really trade higher from here. So basically there are many factors which can tell us that we won't trade higher from there. So basically one is the regular trading hours chart. So as I already showed you, right here you can see that we weren't able to reach the upper quadrant, which is like the objective for the New York AM session, because we traded already higher this much. So that's really important to keep in mind. That is like one sign. Then another factor or another indication is the fact that we have really high resistance price action right here. So all these wicks, all these up and down, seek and destroy trading conditions tells us that we aren't really able to trade high. And also like on the 5-minute chart, it doesn't really look clean. And therefore that already is showing to us that we have like difficult trading conditions. But there's also like a third indication, and for me that's the case that we are way beneath all opening prices. So therefore we are maybe even a bit too overextended to the downside. In that case we can expect only a retracement on the maybe 5-minute or 15-minute chart. We have to be aware of that. Was or I was even looking for that, so I expected only a retracement. I didn't really expect that we would like trade higher from here and take out all the highs right here, because we already traded higher this much. But I wouldn't have expected that we couldn't even take out the 5-minute highs right here and maybe trade into the 5-minute fair gap right here. So that was my objective for the day, but we didn't do that. We traded lower. And also like we have like the opening prices, which can tell us that we are already too extended to the downside, but also the fact that we have like the higher time frame gap right here. So basically 6 p.m. opening, and in this case we traded below it. And so now that's like basically all price action to the upside is like on the daily chart a huge wick to the upside. And now we have also like price action to the downside, so that's basically another wick to the downside. And we're trading only, or we're sticking to the higher time frame gap right here. So that means, as you can see on the daily chart, so now we have to look for yesterday. So the candle right here, the up close candle right here. So this one is today. We are looking at this candle. As I already mentioned, we took out previous day high and traded aggressively higher. So that's huge in this case. We have a huge wick already to the upside. And at the moment, at the 10 a.m. macro, basically our body looked similar like that. So we have a small daily body with a huge wick to the upside, and also like a small wick to the downside as well. And so basically that's our third indication. Every time the daily body is like really small, there is no clear objective on the higher time frame. So for the daily chart, the higher time frame objective is already met. We traded higher. And now the opening objective for the New York AM session is only to rebalance lower to retrace a bit lower to the upper quadrant on the regular trading hour chart I showed you. So therefore, we can expect that we will not really trade higher with our market maker buy model. And I think that's something I really had to learn, because that just shows to me that even if I'm still doing basically everything right on the lower time frame, so I'm following my system and it's like it should play out, we still couldn't trade higher. And yesterday I wasn't a bit shocked, or I was confused why we couldn't trade higher, but now with regarding like the daily sentiment or the daily candle, it just makes sense, especially especially with regarding the regular trading hours. I really think it's more obvious why we couldn't trade higher from there. So because we were already this overextended, we have like 300 points right here already before the opening, and therefore the opening can't really trade higher. It just makes sense. We just displace a bit lower, or not displace, trade lower, we retrace a bit lower to the upper quadrant right here, also reacting off it right here, and also like yeah, just sticking to it. So that shows to us that it was a really difficult trading day in my opinion, because I think the most dangerous days are the days where I lose because I follow my system on the lower time frame. What I mean by that is basically exactly what I showed to you, that I'm, for example, trading a market maker buy model, and I'm following my system, but we can't really trade higher from there, and I'm just getting stopped, and I'm re-entering because I still stick with my bias, what I want, but I just didn't understand that we have already met the higher time frame objective. So basically that's it. I think it's a bit confusing maybe, or I don't know. Took me a while to get it, to explain it as well. But yeah, I hope you liked it, and maybe see you later. We will see how today's trading will play out. But yeah, see you in the next one.